So you see price tested this, came down and went back up to negative 61 here. Eventually, and it reacted off that point. Like, even if it was just little, it reacted off before it finally moved up for whatsoever reason. Now, what you're trying to do in the forex market is add more tools to your toolbox, tools that work, only tools that work. You're not adding something that does not work or something that is out, it's not necessary. All right, so same thing is going to happen here. That's why I projected Bitcoin to fall. This is the 4 hours chart. Okay, so I caught a sell initially from this zone, and I was targeting this area for the same reasons I've explained. All right, so I saw the structure. Let me use a daily so you can see the candle. I saw this structure, bearish at best. You have the high, you have the low, you have the lower high, you have the lower low, lower high. Or let me just keep calling them. Okay, lower low, lower high, lower low, lower high, lower low, lower low here. Alright, so zoom out so you can see the structure clearly. Right, this is a strong high. A strong high because it broke below the previous low. Another strong high broke below the previous low. So if you're going to keep tracking them, you can simply do that by using your trend line. So let's do this. You see, it kept breaking and breaking and breaking. The next one came in here. Price broke this level. So it's like it keeps breaking until when price came here. So you're also marking the highs. Okay, also marking the highs. This was the first high. This was another high. This was another high. Price is not supposed to break this high if this bearish move is to be sustained. Okay, but now price did. It broke the high. All right. So what's price going to do now? It's going to retrace. At what point is it going to stop? That depends on where it finds supply. Now there are numerous supplies along this, this trend. There's no how there won't be supply around these highs, but for whatsoever reason, price came up, went all the way to the top, and okay. So if you look at this now, you're seeing so many highs, right? You're seeing so many highs, but these highs are not fresh. These supplies rather are not fresh. They're not very fresh in the sense that price has mitigated them. It has been used up. So I'm just going to mark this one here. This one, I just hope you can see the one I marked this. So started here. Then we're going to see if price used it. Price didn't use it. Price like it didn't touch it here. All right. But let's just keep mapping out all the supplies. The next one we have is this. Boom. Price pushed, but price already mitigated. Price already touched it. The next one we have is this. So it's the candle before the momentum candle. Actually, here, this was the momentum candle. This was the momentum candle. Because this one candle seems to have more momentum than this. But let's just consider this as well. We can also consider this. But if we consider this one, we see that price mitigated it, and that's why price dropped from it. All right, price mitigated and dropped. Now when we go down again, the next candle we can see, this comes with practice, by the way. It comes with practice, and every time price touches supply or demand, it has to break structure. So you see that it tapped into this supply and it came down to break structure. Okay, and then it kept doing that. All right, keep doing that. So 2 things to look out for when, to know if price has changed or if price is going to change: supply and demand. Right, that price is always going to react off supply and demand zones. But at the same time, watch market structure. In as much as this is a bearish trend, low, high, lower, low, right, lower, low. But look at this substructure. So from this lower low now, it's supposed to go up to make a new lower high. But within this move, you're seeing substructures, small structures within the structure. And the moment you see a break of structure, like I said, market structure is key. see a break of structure. The first break of structure happened here because this price broke this one. Then it came down again, broke it again. Then you know the trend is shifting. So all you have to do is wait for the retracement and capture your retracements. If you want to capture it, sometimes the retracements are big enough for you to just catch and just go your way. So you can even just use your Fibonacci retracement tool and catch a few, you know, a fuse. So this is this. You can catch from here, take your profit here, all right. Or if you didn't get that one, you could wait for price to come down. Then when it comes down, you track your Fibonacci retracement. So take your buy from this point, right? Basic concept: supply and demand, understand the candlesticks, and then know when to enter. And then you catch your negative 27. This is also negative 61. So you could hold on. This could be your first take profit point. This could be your second take profit point. If you didn't catch this one, same thing applies. As the market came up like this, what you have to do is move, start from the area that price started from to break the structure, map it out. Now this one I was not very efficient because market was already at a place that it had already gotten enough gas, which is this zone. So I believe there's a strong supply here. Okay, this is strong supply here. So the market did not see any need to come up to this negative 27. So these are one of those times that the market just goes against you and you think, this thing is not working. It's not that it's not working, so that the conditions with which it's supposed to work are not met. Okay, right? So that times like this is when it will be favorable or better for you to just catch your trade at the high. But at the same time, let's say you're expecting price to come here, okay? So you're waiting, you kept your take profit here, but then you observe these substructures. Price is no longer going up. Instead, it's consolidated for a while because it used this low and this high, use this low and this high, and you're seeing that the structure is changing. That's why you need to leave the trade. Okay, so let me zoom into this area. You can see the structure, right? Bearish. From the lower high. I think it's supposed to go above to form a higher high, but it fails to form a higher high. Candles rejected this price, this level, and then it came down from the lower low. It broke the structure here. That's a sign that you should, back off to an extent, especially when you're already close to your take profit. I mean, how much can you lose when you're already close? Like just a few dollars. All right, so just close, right? So when market breaks structure, it's definitely bound to retrace, right? It's bound to retrace. So you just use your discretion and everything to just trade the market. And it's going to get to a point where you can do it so well that you now develop a strategy around what that's just unique to you. Okay, and you don't need to even spend so much time on the chart. Now let me show you something. In as much as this structure shifted here, low, high, lower low, lower high. If for those who noticed, I was trying to see how much the supply was going to hold. I thought maybe the market was going to come up at some point, but it didn't initially, right? Until it pushed, like it just fell. But now the market came back up to test it here with this candle, and you see the moment it tapped, it just fell again, leaving another supply here. So that's just how the market moves. It just moves between supply and demand, supply and demand, supply and demand, and then before you notice what's happening is when market structures already formed. But at the point where the market was there, you already knew this was a demand zone, so you're not even waiting for this break of structure. You already know you can take the trade from here. All right, that's if you're an aggressive trader. Like sometimes we shift between being conservative and aggressive, but sometimes you're not very sure and you don't want to risk this drawdown. You just wait for the market to break and then give you a new entry point, and then you just go with that. Okay, but you that entered here, the person who entered here had already gotten maybe this move, so like 2 entries already before. But it's best to just stay less greedy. That's the way you make more. Be less greedy. Go after, don't just go after every move you see. All right, just wait for the setup you're comfortable with, the one you've back tested and tried and you're sure works. That's the one you should just go for. Okay, so that's that. Market structure is key. For understanding supply and demand, you always know where price is going to react from. Now if you look at this area again, so I said this was the previous high, right? In this case, this was the previous high. Let me go use this. This was the previous high. The market came this low. Let me go to the daily. Right, it's clear right here. So whenever you're not seeing structure clearly, just move up the time frame. Just go a time frame higher. You're going to see a lot of those noise. A lot of that noise will be cancelled out. Okay. So I'll tell you why. I want to take I'm taking profits where I want to take profits. This was the strong low. Let me just clear all of this. It's just cluttering my screen. Go, 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 go. Alright, I think we're good. Alright, so this was the strong low that broke this, strong high that broke this low. It breaks, crashes to the bottom. It goes up, right? This is another new high that was formed. So this high is now a strong high because it breaks this level. And then it goes up again, comes down, break this level. So this is the most recent high. Alright, but then price went up. It's supposed to, if this bearish move is supposed to be maintained, price is supposed to come down from here, but it broke above it. Okay, so what are we expecting? Price to retrace, but it does not retrace until it has gotten into supply. There's a supply zone here. It should be around the H4 or H4. It should be in the early time frames, right? So we now have another, but if you look up here, you're going to see another supply zone that's up here. Okay, it's up here, and price has not touched it yet. And this is Bitcoin. Bitcoin is bullish, but it has been bullish for a while, right? So the market might just come down, gain some momentum, and push and react off that point to create a new lower high and then shoot upward. So you just have to keep mapping your supply and demand, and then inspecting the market properly, knowing where you are in price, and then from there just make sure you're inspecting the market properly to just see every little detail you need to make analysis, so nobody's a master. People still make losses. I mean, you can even see I made some losses earlier, but overall, do you know what you're doing, and are you going to make profit in the end? Okay, so I would love to even put my face on the screen, but anyway, okay, so what I was trying to even explain. So now the price has broken structure, and this break of structure is really intense because it broke structure here and at the same time broke structure here. Okay, and then tapped into into supply. So market has multiple points where it has created demand, multiple points along this push. I told you the candle before the momentum candle is a demand zone or a supply zone. You can see one here. All right, this was a momentum candle. Price pushed and price has not even come back since. Okay, but now there are other things you need to know, right? But so the price is definitely going to react off this point, at least initially. It's going to react off this point initially, but we have to just go lower to see if there are other reasons why price will come below this point. And there are so many other reasons. I can see them. Maybe people who are pro traders can also see them. Okay, because the market is not, it's easy to trade, but it's not so plain. So you need to have a certain level of experience. You need to have an eye for these things to be able to, because people who make money have to make money when you lose money. The money has to come from somebody. I told you, you're always buying from someone who is selling, and you're always selling to someone who is going to buy. So the money has to come from somebody. There's over $4 trillion now moving in the forex market every day. The money has to come from somebody's account and that person's account. All right. So you need to learn and just study. Don't focus on making money now. Just focus on learning, getting the skill. And then when the time comes, you're going to make money. All right. So I have reasons to believe price is going to come all the way down to this point. And yeah, that's that. But I'll talk about a certain chart pattern. Most of you must have seen in trading in babypips.com. So we have something like this. We have double tops. I tell you this is a bearish pattern, because whenever you see a double top, that means price was supposed to make a new high because it's an uptrend, but it failed to. So let me even make this clearer. I think I should stop this video now, because this video is a little bit over. Wow, it's almost 50 minutes. Ouch, I didn't intend for it to be this long, but anyways, I'll be cutting out some, so let's say to be roughly around 40 something minutes when I'm done. So I'll just end this video now. All right.